Everyone feels like this cycle is over. The charts are red, the headlines are screaming, and sentiment has hit levels we haven't seen in years. But I remain a perma-bull. Why? Because I'm a fundamentalist and I understand where Bitcoin is going. I understand how Bitcoin was intrinsically designed, and I hope you do too. That said, I'm gonna ask you to entertain this thought. What if this moment, the one that feels like it broke the market, is actually the final sentiment reset before everything resets? Let's look at some key facts in order to determine how we should be feeling and looking at this moment in time in the market. Right now, we see the Bitcoin Fear and Greed Index is sitting at 21. That's the same level we saw at the August 2024 bottom and again in March of 2025, just this year. And across the top 100 tokens on CoinGecko, the average drawdown from all-time highs is minus 49%. That is deep pain. Even Tommy Shaughnessy, Delphi Digital's co-founder, who's been here 8 years, said sentiment is at or near all-time lows. And these points have always been great buying zones. In this video, I'm going to show you why this market is far from finished and why you should not be despairing unless you've put in a bunch of leveraged longs, which I completely discourage here at my channel. This is not the kind of channel that I have. We'll also be looking at the data that proves whales are buying while retail, the 99% that is completely unplugged and has no clue because no one's educated them. And we're also going to see how the Fed's own actions are quietly setting up the next liquidity wave, and why the biggest names in crypto, those who know, just like Tommy Shaughnessy, those that have been here a long time, what they're doing and how they're preparing for what comes after this shakeout, and what you too should be doing if you can afford it without gambling or using any money that you need to survive. I do not encourage irresponsible trading, but Bitcoin is the future, and key blue chips are the future Microsoft and Amazons and Google and Metas of this new Web3 financial era. So those tokens are worth your time, are worth your attention, and worth your conviction. And because once you see how all these signals line up, you'll understand why this might very well be the last time fear ever looks this cheap. All right, so let's get into it. So let's talk about the line in the sand at $100,000 level support line. Because if we really want to understand where we are in this story as it unfolds, we need to start with the one line holding this entire market together. This is the point where conviction meets fear, where every bull run either resets or collapses. That line sits right around $100,000. And everything happening right now is orbiting around it. Bitcoin has now spent 180 straight days above $100,000. And that price has become a structural floor built on enormous trading volume and conviction buyers. It's the base of the entire bull run architecture. Crypto quant data shows the short-term holder realized price, which is the average entry for new investors, sits around $103,500. And historically, Bitcoin dips roughly 10% below that level before bouncing up. It's the area where fast money capitulates and patient money reloads, which I hope you are. And if you zoom out, you'll see every massive rally since 2023 started from that same blue trend line. Even the Gaussian channel, which smooths Bitcoin's momentum bands, now has price touching the lower edge. That lower band has triggered 4 rebounds in this cycle alone. So if $100,000 holds, bulls reset. If it breaks, we enter open air where only fear decides price in the short term. But on-chain data shows support forming exactly where it matters. Glassnode's short-term holder and UPL, a metric that tracks whether recent buyers are sitting in profit or loss, shows that most new investors are now underwater. And historically, when this indicator turns negative, it signals stress and fear among short-term holders, which has often marked prime accumulation zones for long-term investors, which I hope everyone everyone here becomes, or is not already. And at the same time, Arkham data spotted whales pulling more than 1,164 Bitcoin, about $120 million off of Binance and OKX in just 6 hours. These large withdrawals point to accumulation and long-term storage behavior. Whales buy when retail tweets game over. They move coins off exchanges while the crowd panics across on-chain dashboards. AI XBT, a well-known analytics account followed by professional traders and funds, put it best. This is rotation, not capitulation, and the data backs that up. CoinShares, for instance, reported roughly 421 million in new Solana ETF inflows during the first week of November, one of the largest single asset inflows since these products launched. This level of demand highlights how capital continues flowing into high conviction narratives, even during periods of market pressure. And if we take a look at the altcoin burn and rotation, altcoins are catching fire right now, and it's by design. Benjamin Cohen, a respected market analyst known for identifying macro crypto cycle patterns, showed that the alt BTC ratio tends to bottom near 0.25 right as quantitative tightening ends. And right now, we're weeks away from quantitative tightening officially wrapping up in December of 2025. So be patient, because when this happens, he believes we could see one more sharp dip. So be ready before the trend reverses, with all BTC potential dropping another 30% before the turn. And if we take a look at the total 3 chart, which is the altcoin market cap excluding Bitcoin and Ethereum, it shows a 2-year RSI pattern and a 1-year ascending triangle now touching its lower trend line. That same setup precedes every major rally over the last cycle. And according to top analysts, the weak price action since October 10th could come from leftover liquidations that are still unwinding. So you have to look at the bigger picture. Some funds were running balanced trades, long in the market with an opposite short position to manage risks. But when exchanges automatically close those shorts, they were forced to sell parts of their long positions afterwards. It's more of a chain reaction in leverage than a loss of confidence. There are always tailwinds to decisions. It's important to remember this. And where's this new capital going? Bitcoin and Ethereum ETFs saw outflows of 186 million and 135 million, while Solana ETFs took in 70 million on the same day. Institutional money continues flowing into sectors with stronger conviction and clearer momentum inside the crypto market. Now let's shift gears and take a look at the macro market setup. Because while the crypto market panics, the traditional system is bending under its own weight. The US government shutdown is now expected to last until December 1st, stretching to 61 days, nearly double the previous record. And in the first 30 days alone, the US borrowed $600 billion, about $19 billion a day. And at the same time, the Treasury General account is refilling quickly, draining liquidity from markets just as it did in 2019. And back then, the Fed stepped in with emergency cash through overnight repos to keep the system from freezing. And now the same playbook is unfolding again. In just 5 days, the Fed quietly injected $125 billion through repo operations, surpassing even the levels seen at the height of the dot-com bubble. Rate cut odds for December have dropped from 90 to 67%, reflecting growing uncertainty about what the central bank does next. This pattern looks almost identical to the setup that came right before full-scale quantitative easing in late 2019. Cohen's macro chart points to quantitative tightening ending in December of this year, 2025. The same month, everything flipped last cycle when liquidity began flooding back into markets. History's rhyme is getting louder, and smart money is moving on. Even while all this fear unfolds, smart money is building. Bitwise and BSOL Solana ETFs just pulled in over 130 million combined. Also, Jack Dorsey's block will enable 4 million Square merchants to accept Bitcoin within days. So that's one of the largest real-world payment integrations in history. And look at the divergence in leadership. Warren Buffett added 183 billion in T-bills in Q3 of 2025 of this year, while Michael Saylor bought 42,706 Bitcoin. Buffett's T-bills lose around 2% a year to inflation, while Bitcoin keeps compounding at 24% CAGR, meaning its average annual growth rate over time, even after adjusting for inflation. That's a paradigm shift. So this is the difference between defending wealth and expanding it. Every signal shows institutions reallocating toward assets that survive liquidity cycles instead of dying in them. So now we're going to shift gears and we're going to talk about the setup for what comes next. Seller exhaustion is forming. We know, we've talked about this. We all feel it. Glassnode's on-chain flows show short-term holders capitulating while long-term supply keeps climbing. And this is where mindset matters most. At this stage of the cycle, it's never about catching the perfect bottom or going all in. It's about surviving through the noise, knowing what you're holding, positioning small enough to stay calm when the market feels unbearable. The people who win this game aren't the ones who swing the hardest. They're the ones who keep showing up when everyone else is burnt out. Those who know how to account for the shaky days, for the volatile days, those who are not over-leveraged. And right now, the market is doing what it always does at the end of a shakeout. It's clearing leverage. It's clearing overconfidence, and it's clearing the noise. Once the flush ends, new buyers step in, fresh capital returns, and the same story starts again. So I hope you start to identify patterns and not give into or be tossed around all this chatter and negativity and lack of education on crypto Twitter. As we wrap up today's video, just know whether this is the final shakeout or not, this is the point in every cycle where the market tests how deep a conviction goes, where you find out who you are and what you're made of and what you're doing. We see that the charts right now speak fear. Although if you zoom out, you can still see a general uptrend. The data shows accumulation. The system may look broken, yet this is exactly how new systems are born. This is the purge before the flood. And the only question is, are you ready? Will you be ready when it flips? So if you found this video breakdown in news coverage and evaluation and analysis valuable, make sure to like the video, subscribe if you haven't yet, and share the video with someone who needs to know what is going on in the market right now. Stay focused, stay calm, stay steady, reevaluate your process. Make sure you're not over leveraged because the next move is already being written. And I hope you are part of it. I love you guys so much, and I'll catch you guys here tomorrow. Ciao, take care.